first, let's see, how did I find Kaspi for today's deep dive? Well, it's pretty easy. It's actually one of my own favorite private holdings in my portfolio of listed stocks. You may have seen it in a previous video, which you can go back to and look at again, where I do a quick run through of my actual listed portfolio holdings. But for today, I simply went back to my stock portfolio and checked which one should I do a new presentation of. The reason I chose Kaspi is because it's a high growth company. It has a high historical and current sales growth and earnings growth rate, and a very low earnings multiple. It's actually below 7 for next 12 months earnings. So this is a very rare company which has a high growth rate and a low multiple. That's really the holy grail of investing, especially value investing. And usually those things are value traps. So let's see if Kaspi is one of those value traps. It has been valued higher as early as, or as soon as shortly as just 1 year ago. The company was at 144 and it's currently 40% lower at $87. Yes, it's measured in US dollars because this Kazakhstan company has a dual listing as an ADR on NASDAQ. So it's trading in US dollars and you get your dividend in US dollars. Although their main income is of course in Kazakhstan, and also now also from Turkey after a large acquisition. But we'll talk about that later. So what is Kaspi? Well, it's the largest payments marketplace and fintech ecosystem in Kazakhstan. It has an absolute dominant position in Kazakhstan. It's number 1 in payments, number 1 in marketplace, and number 1 in fintech. If you want to picture yourself what this company and their applications are about, then you should think of Chinese super app companies like Alipay or WeChat. You can do more or less everything in China in those apps. And I was myself in Beijing a couple of weeks ago, and unless I had downloaded WeChat and Alipay, there was no chance at all of getting around. You couldn't order a taxi, you couldn't pay in the stores, or basically just don't do anything. So they started out as kind of messaging apps, but grew into these total ecosystem applications where you can buy used cars, pay for your meals, pay for transportation, chat, communicate in all different kinds of ways. So that is what Kaspi also is. And what that means is that once you get this dominant position, it becomes easier to extract value, to increase your wallet share from all your clients. So the key measure here is to how many people do you get into the ecosystem, and how much money can you get from each client. Here is a snapshot of Kaspi, just to see what the first thing you'll get when you check Kaspi in the free resource Koifin. Right now you'll see the dividend yield at 0%, but we'll come to that. It used to be 7 to 8%, but they currently paused the dividend. That is one of the reasons that the stock is down and why it's extra interesting again. We can see the price earnings ratio on reported last 12-month numbers, LTM, it's 7.9, and next 12 months forecast, it's 6.9, so it's extremely cheap. And this is not a small company. If you take a look here at the market capitalization, it's $17 billion, even after being down by 40%. and looking at analysts' current estimates, the sales growth for 2025 is actually 39% plus, but that's including this large Turkish acquisition, Hepsi Burada, and also Rabobank. So they are expanding into more geographical areas in this Eastern Europe part of the world, where I expect them to keep their dominant position, and the same thing that they have in Kazakhstan, I expect them to gain in Turkey, and probably in increasing regions in the area. For 2026, consensus is just expecting a 7% growth rate as they are digesting these large acquisitions, possibly other problems or worries. If anything, I would expect this number to become higher as the worries decrease. There is probably also a currency component in this, both from the Kazakh currency and US dollars. And of course, there's always some kind of inflation problems and currency eroding going on in Turkey. But then in 2027, the consensus estimates are becoming a little bit more positive again, with a 27% growth rate expected. So as we can see, this is still very much a high growth case. The estimates for earnings per share are a bit lower, but they are still anyway in the 15 to 22% range, which very much means that this is expected to be still a highly fast-growing company and highly profitable, and yet it is valued at just 7 times next year's earnings. So what's going on there? That's what we'll see in the fundamental section, but this is why I right now think that this is a very interesting company from all various types of screening. And next video we will take a look at the technical analysis. What can we discern from its stock price movements? Is there a headwind or a tailwind?